So hello all my dear students of full English batch. I hope you all are doing good. I hope your studies are going on great for your upcoming exams of November 2024. So today I have made this video for you all with respect to certain amendments which are made by the Government of India in the form of some notifications and circulars which are applicable for your exams of November 2024 and which we have not done earlier because it was not available with us earlier. And ICAI has uploaded a statutory update on their website. So accordingly, it is my duty and obligation to address these things to you all. Okay. So today we are going to do this particular amendments. There are some very important amendments which are covered over here, which are very latest circulars of CBDT, latest notifications of CBDT relevant for November 2024. Now, before I start with that particular thing, I would like to clarify a few things before that. Now, whatever you have done in your class, absolutely it is fully amended as per the Finance Act 2023, which is relevant for your exams. All those who have done our classes in full English, all those who have done our classes of regular batch or fast track batch or practical oriented batch, or anybody who has taken our books, it is all fully updated as per Finance Act 2023. But yes, obviously there are some notifications which come later on, which we were not able to cover earlier because at that point of time, we ourselves was not aware about that particular notification. We were not aware about that such kind of notifications will come. Even ICAI was not aware of that. So ICAI, what do they do? They generally bring one study material. Okay. ICAI study material. And then they bring some amendments for what? In the form of a separate file. They bring some amendment in the form of separate file, which they brought for May 2024. And we have discussed this earlier. And we also have the video of this earlier in the form of taxation of online games. And this video I have already uploaded for May 2024 students as an amendment which was brought by ICAI through a separate sheet on the website. Okay. Now, obviously, the next attempt comes, that is November 2024. So, they have brought a new sheet for amendment. But unfortunately, what is happening now, this sheet covers two things. This sheet covers some new amendments and some also old amendments which were already covered in the old particular sheet. So, they have duplicated that because whatever extra amendments were applicable for May 2024 will also be applicable for November 24. So, rather than bringing only new amendments, they have made a consolidated sheet which covers old amendments also which were brought for May 24. And they have brought new amendments which are absolutely fresh for November 2024. So, anybody who is watching this particular lecture for the first time, it means if your November 2024 attempt is your first attempt, then you have to watch this video also and this video also which we are doing right now. Because if November 2024 is your first attempt, then you would have not watched this. Okay. Then you have to watch this video also. In the description, I will put the link of this video. And along with this, the amendments which we are going to discuss today, that also you have to see. If somebody who has given exams in May 2024 but didn't clear, okay, then you have to only watch this video because this one, May 2024 video, you would have watched earlier while giving the exams of May 2024. So the moral of the story is, if you are giving exams in November 2024, you have to watch both the videos, today's video, as well as the video which I uploaded on taxation of online games, which covers the amendments relevant for May 2024. Okay. Now, before we go ahead, I would like to just say one thing very clearly, that because the new sheet uploaded by the ICAI on the website covers both old and the new amendments, I will only be discussing the new amendments. I will not be discussing the old amendments because for that I have already uploaded the video in the form of full English. I will mention in the sheet, don't worry, that this was already done in May 2024 amendment. This was already done in May 2024 amendment. Yes, this one is not done in May 24. This is a fresh one. So we will discuss this particular amendment. So I hope you all have understood this particular format, how you are going to do. Okay. So you are just supposed to follow what? Your book along with this new sheet. If you do your book along with this new sheet, all the amendments will be covered. You don't have to do anything, because if you do the new sheet, the old sheet of May 2024 will automatically get done. Okay. For lectures, you have to see the new one as well as the old one. Okay. It's not more than an hour. Today's lecture will be around 1 hour, 1 hour, 15 minutes. And the last time lecture was also around 1.5 hours. It's not a very big thing. So let us now discuss the statutory updates which are brought by the ICAI relevant for November 2024. It's a combined sheet which covers both the May 2024 as well as the November 2024 amendments. So this is a summary of the amendments which they have given, in which all chapters there has been an amendment. In capital gains there is an amendment, in trust there is an amendment, in TDS there is an amendment, in assessment procedure there is an amendment, in tax audit there is an amendment, and in non-resident taxation there is an amendment. Okay, so now let us start with the first amendment. And fortunately, the very first amendment I have already done in May 2024 video. I will share this file with you all so that you should also come to know which all amendments we have already done in May 2024 video. So I am not duplicating that unnecessarily. I will not speak the same thing again and again. So this first one is already done. The second one is also already done in May 2024. Just a second. This first one is already done in May 2024. Now, what about the second one? Second one is absolutely new. Why it is new? Listen, in May 2024, only the notifications and circulars which were applicable till 31st December were 31st October were applicable. See, ICAI has a funda, ICAI has a policy that all amendments which are made 6 months prior to exams are applicable. So if your exams are in November 2024, whatever amendments are made till 30th of April will be applicable for your exams. The same was the case with May 2024. If you would have given exams in May 2024, amendments till 31st October, we would have already covered in the last attempt. Okay. And in the last revision, last amendment video, we would have already covered. But see the amendment of this date. This amendment came in 18th of December 2023, which is after the cutoff date of 31st October. Therefore, this amendment was not applicable for May 24, but definitely applicable for November 2024. So this is the first amendment that we are going to discuss today. So it's a very small amendment, nothing great as such. It's an amendment made in the chapter of taxation of trust. You all might be knowing that for taxation of trust, it is very clearly mentioned in the chapter of taxation of trust that if the trust wants to invest its money, then it has to invest in the modes specified in section 11 subsection 5. So if a trust wants to invest its money, it has to invest in certain modes which are mentioned in 11 subsection 5. And if you go through 11 subsection 5, 11 subsection 5 mainly covers government securities. 11 subsection 5 mainly cover most of the government securities. And therefore, if you invest in government securities, then you can call that you are investing in what? You can say that you are investing in 11.5 modes. Now, in this particular section, the government has notified and expanded the list of this section, and they have introduced one more investment over here. So that is a small amendment over here. What is that one more investment? See the last line directly. Units of a power grid infrastructure investment trust. So if you invest, if you are a trust, and if you invest in units of power grid infrastructure trust, then that will also be called as what? A specified mode for the purpose of section 11 subsection 5. I hope it is clear to all of you. Is it clear? I hope it is clear. Now, coming to the next amendment. Now, the next amendment is a beautiful amendment made by Finance Act 2023, and now CBDT has come up with a circular. Now, you all might be knowing in Finance Act 2023, the government has made one amendment. What is that amendment? That if you now give a donation, I am a trust. If I give you a donation to another trust, I am a registered trust. And if I give donation to another registered trust under 12AB or under 1023C, then I will get deduction of only 85% of the amount donated. Do you remember that? We have done this particular amendment in the class. We have done this amendment in the amendment lecture also earlier. We have done this amendment in the revision videos also. So therefore, if I am a trust and if I am giving a donation to another trust, say of 100 rupees, then how much will be considered to be as actually applied? Only 85% will be allowed as deduction, not entire 100%. Okay. And the logic of that was explained to you all to manipulate tax. People used to do that, okay, by donating to different entities. A will donate 100 to B, B will donate 100 to C will donate 100 to D will donate 100 to E, and everybody will enjoy 15% exemption of the trust. To avoid this particular practice, Finance Act 2023 has brought this amendment to stop this mischief by the SSE. Finance Act 2023 has brought this particular amendment, which we have already done in the class. Now, CBDT has come up with a clarification with respect to this particular amendment. Now, what is the clarification? Now, before I read the clarification, let me give you some example first of all. Otherwise, you will not understand the clarification in its true spirit. To understand the clarification in its true spirit, you need to understand this example of mine. Suppose there is a trust A and there is a trust B. I'm trying to explain you the logic. The amendment can be done in 30 seconds. Okay. The circular can be explained in 30 seconds. But why this circular was introduced, that will take some time for me to explain you all. Okay. Otherwise, you will not appreciate. Suppose a trust A is there and this trust is a registered trust under 12AB. And this trust has a receipts of, gross receipts of say 300 rupees. Okay. Suppose this trust has a gross receipt of how much? 300 rupees. Okay. Now, suppose out of this, we all know that 15% is flat exempt for a trust. Any trust which is a registered trust will be getting 15% flat exemption under the income tax law. Therefore, what is the amount left after that? The amount left after that is 255 rupees. Okay. This is the amount left after that. Now, suppose if the trust wants to do what? Save tax. Then it has to apply this 255 rupees. If the trust wants to save tax on 255, see, 15% Government of India is going to directly give you. It's an ad hoc exemption. The moment you are registered as a trust, you will get flat 15% exemption. But if you now want to save tax even on 255 rupees, then you have to do one thing. You have to apply that money for the objects of the trust. Okay. Without application, you cannot get the deduction of what? 255 rupees. If you don't apply this 255, then you have to pay tax. The trust has to pay the tax. Okay. So now, for example, out of this 255, suppose the trust has donated how much? Say 100 rupees to trust B. Trust B is also a registered trust. Okay. So now, will I get the exemption of that? The answer is yes. But as per the Finance Act 2023, you are donating 100 rupees. Okay. But you will get exemption of only how much? Exemption of only how much? Only 85 rupees. I hope everybody is clear with this. Even though you are donating 100, but the government says that exemption will be only of 85 rupees. You are not going to get exemption of more than 85 rupees. Only 85% of the amount donated will be allowed as exemption under the income tax law now. Therefore, now how much is left? 255 minus 85. 170 rupees is left. Okay. Now, I want to further save tax. What shall I do? I have to apply this money. I have to make application of this money. If you want to save tax on this, you have to apply this money for the objects of the trust. So I have to apply how much? 170 rupees. If I apply 170 rupees, my total income will be 0 and therefore no tax will be imposed on me. Okay. I hope it is clear to all of you. This is how a trust will compute the income. I have not said you anything regarding the notification so far. The CBDT circular which has come over here, you can check over here. I have not said anything about it. I have not said anything about it. I am just trying to explain you the existing position as of now before the circular has came. Okay. Now pay attention, please. Listen carefully. There are some very finer points. To understand this amendment, you need great vision of different kind of provisions which are there under this particular law. So I am taking my time. Don't be in a hurry. You also take your time. Okay. Don't be in a rush to understand this amendment. Don't be in a rush. You have to take your time. Be patient enough. Sir, can you please explain us the logic behind the exemption? The only 85% is allowed. It's very simple. If I give you 100 rupees, okay, so I'm giving you 100 rupees after claiming 15% exemption, right? First, my income will have some amount. On that, I will take 15% exemption and then I will give you what? Another 15%. Then I will give you whatever is the amount left. And that amount will be what? Will be added to your income, and then you will again take 15% on that, and then you will distribute to third party. Then third party will again take 15%. To stop this practice, the Government of India has brought this particular concept. Okay. Now, There are some students in whose mind there might be some doubts which can come. That doubt also I would like to address to you all. There are some students says that, sir, this 100 rupees which I have donated, sir, even today I am getting 100 rupees exemption, sir. I asked how. Sir, I am not getting 85 rupees exemption. I am getting entire 100 as exempt. I asked how. So that student is saying that, sir, let's do the breakup of this 300 rupees into 200 and 100. Okay. And let's see that 100 rupees came and I gave 100 rupees as donation. Okay. And 200 rupees came and I applied 170 as application. Okay. Let's do the breakup of this 300. Assuming that the 200 rupees portion is applied for different purpose and 100 rupees portion is what is used for donating to somebody else. So some students might have a doubt that, sir, in this case, sir, even in this case, sir, even after this amendment, still the assessee is getting full 100 rupees exempt. How? So the student tries to explain me this. See how. And he is correct at his end. Huh? The student is correct at his end. Whomsoever is thinking like this is absolutely correct. See, think logically. You have 100, you have received 100 rupees. So you will not directly donate. First, you will claim 15% exempt. Okay, 85 will be left. Okay. Okay, 85 is left. Now, this 15% is an ad hoc exemption. Now, how much amount is left in your bank account after 15% exemption? Think now. You have received 100. How much amount is left in your bank account after this 15% exemption? You still have 100 rupees now in your bank account because your bank account is not reducing by 15. This 15 is an ad hoc exemption given under the income tax law. Therefore, still you have that amount in your bank account. So, you are donating 100 to someone. The government is giving you 85. Anyways, this amount is 0, sir. Entire amount is exempt only, sir. What's the logic of this amendment? Anyways, entire amount is exempt. What is the logic of this? I am not coming to the circular only right now. Circular I'll come later. Let me explain this Finance Act 2023 amendment first. So, even today, sir, entire amount is allowed as exemption, sir. You don't think like this, please. You think like this. If this exemption, this provision would have not come of 85%, then what would have happened? Then 100 rupees you have 100 rupees, you will get 15% exemption, you will get 85 rupees. Now, do you have in bank account 100 rupees completely intact? The answer is yes. In the bank account, the entire 100 rupees is intact. Now, you will give 100 rupees and you will take 100 rupees before the amendment. Before amendment of Finance Act 2023, we used to get entire 100 as exemption. And then you will start to claim loss over here. And this loss can be set off against some other incomes then. That is where the government is trying to what? Stop you. Now you will say, sir, we have learned somewhere, sir, that this loss of set off is not allowed, sir. That is a recent amendment which says that from Finance Act 2021, you cannot carry forward the loss and set off the loss against your income in the next year. But earlier this used to happen. And even today you can set off that loss against some other incomes. Therefore, to stop this practice, the government of India has brought this provision. Okay, so I have just explained you the amendment made by Finance Act 2023, sorry. Now I am coming to this circular. To explain this circular, I have to break this 300 rupees into two parts. Pay attention, please. I received 300 rupees. Okay. I am breaking this into two parts. I am making use of this in two form. Suppose 200 rupees I received and 100 rupees I received separately. Okay. Now think logically, all of you, please pay attention. Absolute attention I want. So 200 rupees I received, 100 rupees I received. I have decided that this money of 200 I will apply for the trust and this money of 100 I will make a donation. Okay. But any of the case, in both the case, you are going to get first exemption of 15%. So here you will get 30 rupees exemption. Here you will get 15 rupees exemption. This comes to 170, this comes to 85. Okay. Now think logically, in this first case of 200 case, how much amount is there in your bank account as of now? How much amount is there in your bank account? 170 rupees is there in your bank account. Okay. Or 200 is there. Think logically. How much amount at this moment after claiming this 15% exemption in first case, in 200 rupees case, how much amount is there in your bank account? Entire 200 is there, na? This 30 rupees is a flat exemption, na? It is an ad hoc exemption. You are not incurring that money anywhere. It is an allowed without incurring any expense. So 170 rupees is not there in your bank account. Entire 200 is there in your bank account. I hope it is clear to all of you. In the second case also, how much amount is there in your bank account? Entire 100 rupees is there in the bank account. Okay. Now think logically. If I want to save this 170 rupees, okay. If I want to save this 170 rupees, So I have to apply 170. I have to apply 170. If I apply 170, my income will be 0. And please tell me what will be my bank balance. Please tell me what will be my bank balance. Please tell me what will be my bank balance. Please tell me. So think logically. 200 rupees I have earned. 30 rupees flat exemption without doing anything. I'll get flat exemption. 170 is my income after exemption. Now, if I apply 170, I will get 170 rupees exemption. How much is there in my bank account? My total income has become 0. But how much is there in my bank account? My bank account still has 30 rupees. Yes or no? Yes or no? It is there or not? It is still having 30 rupees. So now the question is, there is one section, section 13, subsection 1, clause D, which says that any amount left with a trust has to be applied in the mode specified in 11.5. The trust says that you have to apply this 30 rupees in the mode specified in 11.5. You have to apply this, or else you will not get the exemption of this 30 rupees. Acha, we have to apply this 30 rupees also? Yes, only in the mode specified in 11.5. Okay. So the trust has applied this. They are not keeping in their bank account. They are applying that money to the mode in the mode specified in 11.5. Now let's go to the other half, that is to the next 100 rupees. I have earned 100 rupees. I got an exemption of 15. Now I have 85 rupees. Okay. At this moment, how much money is there in my bank account? Please tell me how much money. Think. I received 100. I got flat exemption without doing anything of 15 rupees. Now my net income is 85. But how much is there in my bank account? Entire 100 rupees is there in my bank account. Correct or not? Now, if I give this 100 rupees as a donation, I have 100 rupees in my bank account. Now, if I give this 100 rupees as donation to somebody, okay. Now, if I give that 100 rupees what? As donation to somebody, how much exemption I will get over here? Please tell me. Suppose I donated this. I donated this 100 rupees. Donated 100 rupees to another trust. How much exemption I will get? I'll get 85 exemption. My total income will be 0. Now think and tell me how much amount will be left in my bank balance. Please tell me how much amount will be left in my bank balance. Nothing will be left in my bank balance, unlike the previous case where 30 rupees was left. Why? Because in the second case, to claim exemption of 85 rupees, to claim deduction of 85 rupees, I have to incur entire 100 rupees. Are you able to understand or not? Please tell me. Now nothing is left in my bank account. So there is a concern which is raised in the assessee's mind that. Please think. In this case also, here we are applying this 30 rupees, then we are getting this exemption. So in this case also, am I supposed to apply the 15 rupees to get exemption? The question is, how will I apply in the second case? Because in the second case, to get an exemption of 85, I have to apply full 100 rupees, which I have already applied. So now the question of investing that balance 15 rupees in the mode specified in 11.5 does not arise only. So that is what the CBDT has clarified. The CBDT has clarified that in the case of 200 rupees, okay, in the case of 200 rupees, 30 rupees is there in your bank balance, okay, because in the first case, to claim exemption of 170, you have to apply only 170. You don't have to apply 200 rupees to claim 170. But in the second case, to claim exemption of 85 rupees donated, you need to apply 100 rupees. And therefore, if you have already applied the entire 100%, the question of applying the balance 15% in the mode specified in 11.5 does not arise. So this is what the CBDT circular wants to tell you. I hope it is clear to all of you. You can pause the lecture later on and take a photograph of this if you want. Okay. Now this is what this circular is all about. And the institute has also given one example over here. If you want, I will go through this example. Okay. Let's go through it together. Pay attention. Pay attention, please. Now, this is the clarification. The clarification is only the last 1 or 2 lines. The entire this paragraph is the old provision. Okay. Now, these illustrations are explained below. There are 3 trusts: Trust 1, Trust 2, Trust 3. Okay. Let's talk about Trust 1 first. Trust 1 has income of 300 lakhs, out of which the Trust 1 will get flat 15% exemption. Therefore, it has to apply 255 rupees. Okay. 255 rupees it has to apply. Now, donation to other trust under first regime and second regime, whatever it is. Therefore, if you donate 100, you will get only 85 exemption. Is it clear? Okay. Now, think logically. A trust has 300 rupees, out of which the trust has donated 100 rupees. Okay. Now, the trust has 200 rupees left in the bank account. Is it clear? I hope it is clear. As far as the income computation is considered, after exemption, the trust income is 255. After donating 100, the trust is getting exemptions of only 85 rupees. Therefore, the application of other than point number 4 will come to 170 rupees. Okay. Now think logically. Again. Take your time. You need to take some time to understand these examples. Huh? Again, think. In your bank account, how much money is there? Think. 300 rupees is there. Okay. 15% flat exemption is there. Okay. Now, still, how much amount is there in your bank account? Still 300 is there. Even after taking this 15% exemption, your income comes to 255, but your bank account still has 300 rupees. I hope it is clear. Now, out of this 300, you are giving donation of 100. So, how much is there in your bank account? 200. You can still apply 200, correct? I hope it is clear. Okay. Now, so you have given a donation of 100. So, 85 rupees you have applied. Okay. Out of 100, only 85 will be allowed. So, now how much you are supposed to apply to make your income zero? You are supposed to apply only 170 rupees out of 200. That is the 100 rupees which is donated. Of that 15%, you are not supposed to apply. Okay. There is no need to invest that money anywhere. I hope it is clear to all of you. Only the 15% of 200 rupees portion. 15% of 200 rupees portion is supposed to be what? Is supposed to be invested in 11.5. The 15% of 100 rupees portion need not be invested in 11.5 modes. Okay. So this is what this example wants to tell you. Now you have given this donation to trust 2. You have given this donation to trust 2. This donation is given to trust 2. So again, trust 2 will get exemption. Okay. Of how much? Of 15%. And then the net income will be 85. The trust 2 is again donating to trust 3. So in the case of trust 2, they don't have to keep any money in the mode 11.5. Okay. Because to give donation of 100, to claim donation of 85, they have already given 100 rupees to somebody else, correct? Therefore, nothing is left with them now. If nothing is left with them, how will they invest in the mode 11.5? I hope it is clear to all of you. So this example is a replica of what I have tried to explain you over here in much more detail. If you want, you can take a photograph of this later on. This will help your problem, solve your problem. Okay. So this is what this amendment is all about. I hope it is clear to all of you. Now, the next amendment is some extension of due date. You might be knowing that there are a lot of trusts who have to register themselves up to a particular date. Like 2 forms of trust were subject to registration. Pay attention over here, please. Application in Form A for reapproval of trust under Clause 1 of first proviso to 1023C and re-registration of trust registered under 12A. You might be knowing that all those who are existing trust, I have told you in the class that the concept of trust has undergone a substantial change in the last 3-4 years. The government in last 3-4 years have said that all the old trusts have to re-register themselves under the new regime, that is 12AB. Earlier the section was 12A and 12AA. So all the trusts since independence were registered under 12A or 12AA. But now in last 3-4 years, the government has said that everybody has to get themselves registered under 12AB. And for that, the last date for application was 30th September 2024. Now that is further extended till 30th June 2024. This is the only amendment. Okay. This we have already done in the class, if you remember. 30th September 2023 was the last date to make an application, but that is also extended by another 9 months. Now you can make an application till 30th September 2020, 30th June 2024. So this is a small amendment which is there in this particular discussion. Not very important. The previous one was very important, not this one. Now, after that, some of the amendments which we have already covered in the previous video. If you have watched that video, well and good. If you have not watched, watch that video of taxation of online games that covers all these amendments. So this we have already done earlier. Okay, so I'm not investing again the same time on the same provision. This we have also already done under the previous video, and this also we have already done under the previous video. Okay, now the next one is a big one. This we have not done under the previous video, so this we are going to do right now. Okay, so now pay attention, please, all of you. Now this is a beautiful amendment and a beautiful circular issued by CBDT. Again, see when? 28th of December 2023. Therefore, it was not applicable for what? May 2024 students. But now it is applicable for November 2024 student, because for you all, the cutoff date is 30th of April 2024. I hope it is clear to all of you. Now, what is this exactly all about? Now, let me just give you a brief idea about this particular section first. Now, this is a circular which has come under section 194O. Pay attention. Now, what is section 194O? Pay attention, please, all of you. Now, this is a section which has introduced deduction of TDS in case of was e-commerce operator. E-commerce operator like Amazon, Flipkart, they have to deduct TDS under 194O. I hope it is clear. So suppose there is an Amazon over here, which is called as e-commerce operator. And there is a seller over here who is resident. The seller has to be resident. Only resident sellers are covered under this section. And there is a customer over here. Now the customer is going to Amazon website and the Amazon is sending the payment to the seller. And while making the payment, on the gross amount, the TDS has to be deducted, including the commission portion. Do you remember that? At the rate of 1% under section 194O. Do you remember that or not? So I will not be teaching you the section once again, please. That we have already done. I am going to teach you only the amendments made by the circular. Now, there has been some huge developments over here by the government of India in the last 2-3 years. Huge development. Now, before the development, I can explain you the development. I would like to explain you one simple example. See on the board. Suppose there is a customer over here. Okay. Now, a customer goes to Amazon. There is a seller over here who is resident. The seller has to be resident if you want to attract TDS under this section. Suppose a customer goes to Amazon to buy a phone. He wants to buy a phone. Say Samsung phone. Now, suppose the price of the phone is around 35,000 rupees on Amazon. Now, there are 3 problems because of which a big development is going to come very soon in our country. There are 3 problems. Problem number 1. In today's time, even in today's time, the Indian market, Indian e-commerce operator market is around 5 to 7% of the total market. Only 5 to 7% of the people goes to website and buys the product. Remaining 95% of the people still follows the brick and mortar model. That is, they go to the physical store and buy the goods. More than 95% of the people still go to the physical store and buy the goods. Still, sir? Yes, still. Even today. Even today. So the government of India is really concerned about it. The world is going towards e-commerce and we are not going towards e-commerce. We have increased gradually, but we are not increasing suddenly. We have increased to a great extent as far as e-commerce is considered, but still it is not a good percentage. 5 to 7% of our population does online shopping. Rest of them do only the physical shopping, which is not good for the economy. The entire world is moving towards online platform and we are not. The government has done something that I'll tell you in a while. This is the first problem. Problem number 1, the market is very small of e-commerce. The government wants to increase it. This is the problem. Problem number 2, come to customer. The customer has a lot of problem here. What problem, sir? He is going to website and buying the phone. What problem he has? Suppose the customer goes to Amazon and buys this phone for 35,000. And if later on customer knows that, comes to know that this same phone is available on Flipkart at 33,000 rupees, there is a loss to the customer. And if that same phone is available on some other vendor like Snapdeal at 32,000 rupees, there is a further loss to the customer. And if that same phone is available on some other website at 30,000 rupees, there is another loss to the customer. So the problem number 2 is with the customer. The customer is not able to identify that on which website what is the price. Now you will say, sir, it's very easy. Go to different websites and check it, please. So on how many websites you will go? Please tell me. And how many websites you and me are aware of? Amazon, Flipkart, Snapdeal, what else? What else we know? We hardly know few websites. But in reality, there might be thousands of websites across the country. Thousands of websites across the country where the same product would have been sold. But I am not aware of that. Okay. Come to the seller. Problem number 3 is with the seller. Problem number 3 is with the seller. Okay. So what is the problem with the seller? Listen. Suppose if this customer is going to Amazon and buying a product, but the seller is listed on Flipkart. Where is the seller listed? Flipkart. Now, if this is the situation, then the seller never get the exposure of this customer. Yes, because this customer does not have Flipkart and I don't have Amazon. Yes or no? If a customer has a Flipkart, if the customer has Amazon installed, customer will go to Amazon and order it. But the same product is also there in Flipkart. The seller does not get the exposure of this customer, and he's losing customer. Okay. So 3 problems are there. And the 4th problem is of fraud websites. There might be some fraud websites because of which the customers might get fooled because of fake websites. Now, to overcome all these problems, what is the first problem? To increase the market. We need to increase the online market. Second, the customer should have options. Third, the seller should also have options. The government has come up with a new concept. Listen carefully. ONDC. Sir, what does ONDC stands for? Let me tell you the full form. ONDC stands for Online Network for Digital Commerce. What, sir? It stands for Online Network for Digital Commerce. Sir, what will happen in this? Let me tell you. Now there is a customer over here. I will say buyer. There is a buyer over here. Buyer goes to Amazon. Now Amazon has to get itself registered on ONDC. Okay. Amazon has to do what? Amazon has to get registered on ONDC. Listen carefully now, please, all of you. Still, I have not told you the provision. Provision I will tell you in a while. First, you need to understand the concept. And you will not get any video on this concept on any kind of YouTube. Please think, see properly, please, all of you. And especially if you find in full English, so full English you will not get only. Even in Hindi, it is not there. Nobody has made this video. It's a very complicated concept. Everybody should understand first of all to make a video on it. So buyer will go to Amazon and Amazon has to get itself registered on ONDC. Sir, what is ONDC? How to get registered on ONDC? For that, you need to go to the website of ONDC here. ondc.org. How to join? Okay, sign up and join over here. Everyone's commerce. Okay, this is the website of ONDC. Is it clear? Now, just to give you a feel of what exactly it is, I am showing you the website. I am not going to get into the website and start to make an account and all. I will not do all those things. Okay. Now, what will happen, sir? Now, even Flipkart is registered on this ONDC, for example. Even Flipkart is registered on ONDC. Now, listen carefully. Listen carefully. Now, I went to Amazon and I searched for what? A phone. The moment I will search for phone now, the moment I will search for a particular product, it will redirect me to ONDC. I will not remain on Amazon now. I will be redirected to ONDC. And that will show me that all the people who are registered in ONDC are selling the phone at what price. Suppose Amazon is selling at 35,000. Flipkart is selling at 34,000. Snapdeal is selling at 33,000. It will show me all the details. Okay. So what will I do? I will go to the website which is cheaper or which is I find more authentic. So I have logged into my Amazon account. I don't have Flipkart also. I don't have Flipkart. I will write over here. I don't have Flipkart. Still. I will be able to see the prices of Flipkart. Still, I will be able to order the product on Flipkart directly through Amazon. Through Amazon, I will order on Flipkart. Did you understand or not? I don't have to download Flipkart now. What is the advantage to the seller? This seller who is listed on Flipkart, the seller is not listed on what? Not listed on Amazon. He is not listed on Amazon. He is listed on Flipkart. Okay. Now listen carefully. If the seller is listed on Flipkart and he is not listed on Amazon, still he is getting the customer. How? Because the customer went to Amazon, but he did not like the price of Amazon, so he ordered through on Flipkart. Okay. And then the customer got the access to this. The seller got the access to this customer. So this is the game that the government of India is planning to make everyone at one place, to put everything at one place. Are you able to understand or not? Now, if you have understood this, now I will come to the income tax. So suppose there is a buyer over here. Okay. And there is a resident seller over here. Okay. Now the buyer goes to where? The buyer has which app in his mobile phone? The buyer has Amazon. But when the buyer went to Amazon, the Amazon was redirected to ONDC and the buyer found that Flipkart is much cheaper. Ultimately, the product was sold and purchased through Flipkart. Now, we are using some technical words over here. This person will be called as buyer side e-commerce operator. Okay. Are you clear? And this person will be called as seller side e-commerce operator. Okay. These terms you need to keep it in your mind because now in the provision of the circular, you have to be used to with these terms. Okay. So the CBDT is now trying to answer this question that in case of multiple e-commerce operator, are there multiple e-commerce operator here? Please tell me, all of you think and answer. Is there a multiple e-commerce operator? Yes, multiple e-commerce operators are involved in a single transaction. Is it so? If a multiple e-commerce operators are involved in a single transaction, then who will deduct TDS? Because how the payment will flow, you know. See here. Buyer will buy a product, say of 100 rupees. So buyer will pay rupees 100 to Amazon. Okay. Now Amazon, while paying rupees 100, now Amazon has to pass on that money to Flipkart now, because ultimately the order has gone to Flipkart and then Flipkart will pass on that money to the resident seller. So now when the Amazon is passing the money of 100 rupees, the Amazon will take some commission or not? It is not doing time pass now. It is giving order to Flipkart, so it will take some commission of 2 rupees. And then now Flipkart has 98 rupees. Now when Flipkart will give 98 rupees to the seller, Flipkart will also deduct its commission or not? And ultimately 95 rupees will reach customer, which reach seller. Are you clear? So the question is, who will deduct TDS? Who will deduct TDS? Is the buyer supposed to deduct TDS on 100 rupees, or is the buyer side e-commerce operator is supposed to deduct TDS, or is the seller side e-commerce operator supposed to deduct the TDS? Who is supposed to deduct TDS? So for that purpose, the government has further given two options. First, you need to see that if the e-commerce operator himself is the seller. If he himself is the seller, then that is a different thing. If he himself is not a seller, then that is a different thing. In my case, is the e-commerce operator himself is the seller? The answer is no. The seller is somebody else. So if the seller is not e-commerce operator is not the seller, but some other third party is the seller, then the last e-commerce operator, the seller side e-commerce operator, while making the payment to resident seller, will deduct TDS on the gross amount. On the gross amount. It means it will deduct TDS on how much? On 100 rupees, not 95, not 98. It will deduct TDS on 100 rupees. I hope it is clear to all of you. Did you understand what I said? Because section 190 very clearly says that you have to deduct TDS on the gross amount only. Now this was the case with what? If Flipkart is not a seller. If Flipkart itself is a seller, then this example, this is irrelevant then. If Flipkart itself is a seller, the buyer is buying such product which is ultimately sold by Flipkart only. Why not e-commerce operator can sell its own product also, like Amazon sells its own product like Kindle, Amazon sells Alexa, Amazon sells say Fire Stick. Yes or no? Amazon sells its own televisions also, Amazon TV. Therefore, the second case is if the e-commerce operator is itself is the what? Is the seller, then Amazon will deduct TDS on how much? On 100 rupees. Did everybody understand this? I hope it is clear to all of you. So if there are multiple e-commerce operator, you need to check first of all who is the seller. If the e-commerce operator is not the seller is some other person, the last e-commerce operator will deduct TDS. And if the e-commerce operator itself is the seller, the previous e-commerce operator like Amazon in this case will deduct TDS. This is the first thing that you need to understand as a student. Now the second thing you need to keep in mind. Sir, Flipkart is giving 2 rupees commission to Amazon, sir, and the seller is also giving 3 rupees commission to Flipkart, sir. Giving or not? Flipkart is giving 2 rupees commission to Amazon for giving the customer. Similarly, seller is also giving 3 rupees to whom? To Flipkart. Okay. Sir, whether sir TDS will be deducted under 194H, sir, commission 194H. Sir, whether section 194H will apply in this case? The answer is no. The CBDT has clarified in the circular, and it is also written under the income tax law in under 194O. If you remember, do you remember? In 194O it is written, once a TDS is deducted under 194O, then no need to deduct TDS under any other provision of the law. Are you clear? I hope it is clear. So once a TDS is deducted under 194O here, there is no need to deduct TDS under what? Under 194H by Flipkart, under 194H by the resident seller. I hope it is clear to all of you till here. If it is clear till here, you can take a photograph of this example and I will show you where it is written over here. The provision is still not completed. There are a lot of things that I have to speak here that I will speak one by one. Now, what I have explained as of now is only the thing which I have written on the board. The same thing is written here. 100 rupees minus 2% minus 3%, 95 pass on. TDS will be deducted on what? Entire 100 rupees. Okay. And TDS will not be deducted on what? TDS will not be deducted on the commission portion. Is it clear, all of you? I hope it is clear to all of you. Yes. Now, let me take one more example here, which is given by the ICAI. Okay. So, let's take this example, and this is the example of ICAI. Shall we? Now, see. There is a buyer, there is a seller, and there is a buyer side e-commerce operator. In my example, who is a buyer side e-commerce operator? It is Amazon. And in my example, who is a seller side e-commerce operator? It is a Flipkart. Okay. Now, suppose buyer buys goods worth rupees 100, home delivery, and pays with all fees 118 rupees. Okay. So, the product is of 100 rupees, but there are various fees which are charged by the seller. Okay. So, in all, the gross amount is 118 rupees. Now, the buyer will go to Amazon, will buy the product at 118 rupees and will give 118 rupees to Amazon. Now, buyer has given 118 to Amazon. Now, Amazon has retained 1 rupees as its commission. Whether TDS will be applicable on this? No. 194H is not applicable. Now, Amazon will pay 117 rupees to seller side e-commerce operator, that is Flipkart. Now, Flipkart is also retaining 2 rupees commission. Whether this 2 rupees will be subject to TDS? No, 194H is not applicable. Now, Flipkart will give 115 rupees to the seller. Okay. Now, sellers sells the good at 100 rupees, but it has to take some charges like packing charge, shipping charge, convenience fee, and therefore the total is amounting to 118 rupees. It's very simple. I have told you earlier only. This example is nothing great. It is only telling you that TDS has to be deducted on the gross amount of 118 rupees. Is this clear to all of you? Please tell me. TDS has to be deducted on how much amount? On the entire 118 rupees. I hope it is clear to all of you. That is what it wants to tell us. I hope it is clear. Okay. Now, let me go ahead with the next part. Pay attention, please. This part is very important for us. Suppose I am a seller which is listed on Amazon. Okay. And I have told Amazon that I will give you a lump sum commission of say 1 lakh rupees per quarter. For every quarter, I'll be paying you 1 lakh rupees lump sum commission. Don't ask me per order basis. Don't ask me every order 10%, 5% commission. Take 1 lakh rupees lump sum commission, and whatever you will sell in this particular quarter, you are not going to ask me anything else except this 1 lakh rupees. So the CBDT has clarified that if the seller is giving one lump sum commission, lump sum, not per order basis, then the provision of 194O is not applicable. And if provision of 194O is not applicable, then e-commerce operator will not deduct TDS. But in that case, then the provision of 194H will apply. And then who has to deduct the TDS? The seller has to deduct the TDS under 194H. Read this, please. I hope it is clear to all of you. Read it. Is this clear? I hope it is clear. Correct? Clear to all of you? Now, there are certain things now, whatever is going to come with that, we have already done earlier in some or the other provision. So I'm just repeating still. Okay. So whether the TDS will be deducted on GST, on sales tax, okay, on other items. Okay. For that you need to understand 194Q. We have done all these things in 194Q also. Okay. I'll tell you the same thing once again. Whether the TDS will be deducted on the GST portion, on sales tax portion, on VAT portion, on excise duty portion, on CST portion, sales central sales tax, that depends upon when the invoice is made. If the invoice is made first and the payment is made later, if the invoice is made first and the payment is made later, then do I have the breakup of GST in my invoice? Yes. Then I will not deduct TDS on GST portion. But if the payment is made first and the invoice is made later, then I don't have the breakup of that, then the entire amount will be what? The entire amount will be subject to TDS. Check it please. We have done this similar portion in 194Q also. Okay. Similarly, what will happen for purchase return? Same as 194Q. What used to happen in 194Q? Same logic you will apply here also. Sir, what logic was there in 194Q? Can you please explain us? Yes, why not? In 194Q, it was written that suppose if you have sold something or if you have purchased something, okay, and if you have deducted the TDS, now if you want to return that, then if you have made the purchase return, then in that case, you can adjust that TDS against the same person only, okay, in future transaction. So same here, if I have sold some goods and the return has been made, but the e-commerce operator has already paid the TDS. Suppose Amazon has already paid the TDS, okay, and now the customer has returned. So I can adjust against the same seller. Against the same seller, I can adjust in subsequent transactions. Okay. What if the money is refunded? If the money is refunded, then in that case, nothing will happen. Okay. If the money is refunded, then everything is closed. Okay. So that's what, these are all same things which we have done earlier. Nothing great as such. Now, one last new thing is there which I would like to address you all. Let me give you an example. Pay attention on the board, please, all of you. I will share this slide with you all. Say there is a buyer here. There is Amazon here. There is Flipkart here. And there is seller here. Now, seller is selling some product, say MRP, maximum retail price of that product is 100. Sir, what is the treatment of discount here? Whether discount will be reduced to deduct TDS? Now that depends. If the seller himself is giving a discount, the seller is giving a discount of 5 rupees, then TDS will be deducted on 95 rupees. Because that is the amount the seller is going to get out of this transaction. So seller himself is what? Himself is giving the discount. Then on the discounted price, you are going to deduct the TDS, Flipkart, Amazon, whomsoever is there. But if the seller is saying, no, my MRP is 100 rupees and it is selling the buyer side e-commerce operator and the seller side e-commerce operator, if you guys want to give discount, you give. I want 100 rupees completely. I want my 100 rupees, full 100 rupees. You want to give discount at your end, you can give it. So in that case, the TDS has to be deducted on entire 100 rupees. This is what this 2 points wants to tell us. Check please. Please check. So who is bearing the discount? That is more important. If the seller himself is bearing the discount, bearing the burden of discount, then on the discounted price, TDS will be deducted. But if the e-commerce operators are bearing the discount, seller is asking for the entire amount. If he is asking for the entire amount, then TDS should also be deducted on entire amount. Clear or not? So this is what this great provision is all about and this great circular is all about. I hope it is clear to all of you. Now let's move on to some more points, which some of them which we would have done, some of them we would have not done. Now in this entire sheet and in this entire discussion, these 2 points are only important. Rest of them are not that important. One was that taxation of trust 15% issue and second is this ONDC issue. Now this next amendment we have already done in May 2024 video. So you can check there. Okay. And then this one also we have already done in May 2024 video. See, this came in September 2023. So it was already covered in the last batch, last video. Okay. Now the next one is a newly introduced, which got introduced on 23rd of April 2024. And this is the new one. This was not covered in the last batch. Okay. So I will just discuss this with you all. Now to discuss this, I have to give you some example again, very important. Say there is a payer over here. Payer means a deductor of TDS. This is a discussion on TDS along with linking of PAN and Aadhaar. It's a combination of two provisions. TDS along with linking of PAN and Aadhaar. So there is a payer over here and there is a payee over here. Pay attention, please. Very, very, very beautiful discussion. Now we all know that everybody has to link their PAN with Aadhaar. We have done this provision that you have to link by 31st of March 2022. Okay. Okay. If you don't link by 31st of March 2022, you will be liable for a fee of 500 rupees till 30th June 2022. Okay. And after that, after this, you will be liable for a fee of rupees 1000. Do you remember that? Do you remember that or not? Fee of 1000 will be imposed after that. Okay. And then from 31st July 2023 onwards, that is after 31st July 2023, the government said that if you don't link your PAN and Aadhaar, then you have to face serious consequences, which I have told you in the last attempt amendment video. Serious consequences you have to bear. First, we have told you to link Aadhaar and PAN by 31st March 2022. You have not done it. Now you have time till 30th June. Do it till 30th June, 500 rupees pay, get lost. Okay. After that, 1000 rupees. But after 31st July, if you have still not linked your PAN and Aadhaar, then serious consequences like we will not grant you any refund now of income tax. We will not grant you interest on the refund also till the time you don't link your PAN and Aadhaar. And we will tell the payer, now listen carefully, to deduct TDS at higher rate as per 206AA. As if you don't have a PAN, no PAN case, right? Right or not? Remember, that was also a consequence. Even TCS will be collected at a higher rate. Both TDS and TCS will be collected and deducted at a higher rate. So now the payer has to deduct TDS at a higher rate if the payee has not linked its PAN and Aadhaar. Now, the government has given some relaxation over here. Okay. Some grievances, pay attention, has been raised from the taxpayer reported receiving notices for short deduction or collection of TCS or TDS while carrying out the transaction where PAN of the deductees were inoperative, because the PAN will become inoperative of the other person. So if the PAN has become inoperative, am I supposed to deduct tax at a higher rate? Yes, I am. Now I have not deducted at higher rate. So the government is sending the notice to payer that you have done short deduction. Instead of deducting at 20%, you have deducted only at 10%. So grievances have been raised by the payers. In such cases, as the deduction or collection has not been made at a higher rate, demand has been raised by the department against the deductors, against the collectors, while processing the TDS and TCS returns. Now, there is some partial relaxation is given by the government over here. Okay. To address these grievances, the CBDT has partially modified the circular number 3/2023. Now, what is the relaxation? The CBDT by this circular specified that for the transactions entered up to 31st March 2024, all those who have done the transaction till March 24, and if the PAN has become operative till May 2024, the transaction is done till March and the PAN has become operative till May, then higher deduction provisions will not be applicable on those deductors. I hope it is clear to all of you. Now, this relaxation is not available today in September 2024. Is it clear or not? It is only applicable for transactions done till March 24, and in which case the deductee has what? Linked the PAN and Aadhaar till May. So in that case, as a deductor, it is your responsibility. What is your responsibility? You have to tell the deductee that please link your Aadhaar and PAN till May. Please. You have not deducted, you have not linked your Aadhaar and PAN till March, it's okay. But do it till May, please. Otherwise, I will have to deduct TDS at higher rate, please. So as a deductor, you can inform your deductee, okay, and they will accordingly comply with the provision. I hope it is clear to all of you. Is it? I hope it is. Now, the next is in tax audit, there are some small amendments which are made in some clauses, like in clause 8A, they have inserted 115 BAE also. Why 115 BAE? Because this is a new section which was not there in the last year. So in the current year, they have to incorporate this alternative tax regime also. All these are alternative tax regime now. 115 BA, BAA, BAB, BAC, BAD, BAE. So these are some small amendments. In tax audit, there is no great amendment. So 115 BAE, they have introduced this particular clause over here. One section is introduced. Similarly, in clause 12, they have put 44 ADA reference. 44 ADA reference was not there in the clause 12, so they have referred this now. Similarly, in clause 18, they have referred this 115 BAC reference is made. This was also not there earlier. Similarly, in clause 19, they have done one thing, that they have inserted ABA reference and then they have written any other relevant section can also come here. Okay, whatever is amendment, they have bolded over here. Then in clause 21, there is a Finance Act 2023 amendment, if you remember. In section 37, remember, for illegal expenses, this amendment is there. You remember, if you give any perquisite or benefit to doctors, if you give any freebies to doctor, or compounding of an offense in India or outside India, so that relevant provision which was there under section what? 37(1), in explanation to 37(1), that they have inserted here. There is nothing new over here. You can check it over here. Nothing new. That same explanation they have copy pasted and they have put over here, which we have already done in class. Similarly, in clause 22, we all know that for MSME, there is a separate clause which is inserted in 43B. Remember or not? So the mention of 43B clause H has to be there over here for MSME. Yes, so that they have done. Similarly, here also in clause 32, they have put 115 BAE reference, because that is again a new section introduced by Finance Act 2023. So these are some small amendments which we have done, which they have done in tax audit. Academically, all these amendments are of no relevance. Yes, in practical life, it is of great relevance, definitely. Okay. Now, one last thing is there over here is, pay attention please, all of you. What is this one last thing? Let me explain you with the help of this example. Now, we all know that there is one section by the name called as 10(4)(g). And in 10(4)(g), the government has said that we will notify few things. Okay, let me read the section first. Activity, I am reading the heading. Activity notified by central government for exemption under section 10(4)(g). So the government has notified the activity. They have made the section, but they have not notified the activity. So now they have notified it. So let me read it. What is exactly covered over here? Then I'll explain you. Section 10(4)(g) provides for exemption in respect of any income received by a non-resident. Non-resident is earning some income. From where? From portfolio of securities or financial product or funds managed or administered by any portfolio manager on behalf of such what? On behalf of such non-resident. So, there is a non-resident who has given his portfolio to whom? Who has given? Suppose there is a non-resident who is outside India, in UK. Now, he has given his portfolio to manage. To whom? To Mr. A, who is a resident in India. Now, this person is earning 10 crore profit for him. So, this profit earned by non-resident is exempt under 10(4)(g). Okay. It is exempt under 10(4)(g) only if this profit is accrued or deemed to accrue outside India. This profit should accrue outside India. This is the condition which is mentioned over here. Check. Plus that fund manager should be located in IFSC. Okay. It should be located. It should be an offshore banking unit in IFSC. Okay. So let me give you the clear idea about this provision now. There is a non-resident in UK. He wants exemption under 10(4)(g). The answer is yes. Tell him to come to IFSC. Tell him to open a portfolio account in offshore banking unit. Okay. And that portfolio manager will earn him profits outside India, not in India. Maybe that portfolio manager is earning profit for him in NASDAQ, in Dow Jones, in New York Stock Exchange, not in BSC, not in NSC. Okay. Then it is exempt. So this was the old provision. I am not saying anything new. Now the new provision is point number 2. See on the board. Such activity carried out by such person as may be notified by central government. So now the government has notified one more activity. Okay. Which is exempt for non-resident under 10(4)(g). Now what is that one more activity? Check. Accordingly, the central government has via this notification notified that income received by non-resident, I have made this chart. from activity of investment in financial product, from activity of investment in financial product by the non-resident, in accordance with contract between such non-resident and capital market intermediary. There is a capital market intermediary and there is a contract between non-resident and capital market intermediary being a unit of an IFSC. This capital market intermediary is located where? It is located in IFSC. So whatever income is earned from here by the non-resident, it is exempt under the income tax law. That is what it is notified over here. I hope it is clear to all of you. Is this clear? Please tell me. So this is what, there are few amendments which were applicable for November 2024, which I have promised you in the class also, that whenever ICAI will bring the amendments, I will address you all, don't worry. The kind of amendments which were covered in this particular booklet, especially the ONDC one and the taxation of trust one, are not self-explanatory. You have to watch this particular video properly, and you can also forward this video to your friends who need to understand direct tax in one of the best possible manner in full English. Okay. So I will sign off here. Okay. I'm signing off here, and I will be coming up with lot of videos for you all for November 2024. Like some revision videos will also come which are left over. Like MCQ case scenarios, I'm going to discuss with you all the ICAI MCQ case scenarios. 34 ICAI MCQ case scenarios have been uploaded by the ICAI. I'll be discussing all of them with you all on YouTube, and latest RTPs, latest MTPs, and many more things like this. Okay. So till then, take care all of you. I hope you all have enjoyed it. If you have enjoyed it, do two things for me at least. One, you have to comment below that how was your experience of learning this lecture and overall direct tax from me. And second, you need to share this video with as many students as possible from your side. So take care all of you. Bye.